We all know how much money there is to be made in real estate investing. Now, where does the return and the profits in real estate investing actually come from? Well, today, I want to break down my rental property over the last 7 years and where most of the profits in that property have come from. Time to think like an investor. Hello and welcome back to the channel. If you're new here, my name is Josh. I'm an investor and I'm a CFP, which is a certified financial planner. And on this channel, it is all about personal finance and investing and learning what we can. And a big part of that, right, is not just the math and the science of investing, because you can read that in any old book. A big part of this is, what is it like to be the main character in the story of investing? When it comes to real estate investing, what is it like to be the person who actually owns the property? Sure, we can read books that tell us about how to have a more profitable investment or where to find the best properties or what areas to look in and what to watch out for. But what is it like to actually own an investment property and see the different streams of income come in, the different surprises that come up? And all of this being said, what can you expect if you're someone who wants to get started investing in real estate? And maybe if you're someone who already invests in real estate, is the property that you own kind of lining up with somebody else's, i.e. mine? So today we're gonna do a deep dive into the numbers. I've got them all prepared, and I'm gonna show you the exact proportions of where my wealth has been generated through real estate. So guys, I wanna bring up this spreadsheet that I've put together that walks through the rental property that I own. And you've probably seen some of the videos I've done on it. We've had our fair share of adventures with it. But today I wanna talk about the specifics of the finances and kind of do a deep dive for you. It's pretty easy to see what I've got going on here. First things first, I'm gonna show you this first tab, which looks at the different income sources when it comes to investing in real estate. So for me, I have things broken down on a monthly level and an annual level. It's just the monthly column times 12. There's nothing really going on there. But I just want to show you, okay, what is it that I'm charging for rent? Because that is obviously the biggest source of income when you're doing real estate investing. What are you charging your clients? What are you charging your tenants? And for me, that number is $1,800 a month. The property that I own, I rent out for $1,800 per month. It's like $950 on the top floor and $750 on the bottom floor. And so it is a duplex. I get to rent out two different sides of it. And if I assume, which is actually correct, I've actually done the math over the time that I've owned it, I usually have it rented for about 11 months of the year, which is great. We usually only have 1 month of vacancy on average, which I'm happy with. So if we multiply that by 11, it's about a little under $20,000 a year in income from the rent itself. Now, here's some other kind of phantom ways that you make money in real estate investing. One of them is the fact that your tenants pay the mortgage down for you, right? Because you're using the money they're paying you to pay the mortgage, which means that effectively the debt that you own, that liability is being reduced. So over time, you're not just gaining equity if you take the cash that they're paying you and the cash flow you get from the rent and investing it or whatever, you're also making money from the debt reduction in the mortgage of the property. So over the course of the year, there's $392 or $4,704 that is going purely towards just reducing debt that I don't have to pay for. So that's really nice, right? Now, another aspect is the home appreciation, the appreciation of the house's value. Now, I bought mine for $183,000, and since then, over the last 7 years, we've had it appraised at $215,000. There's been some solid appreciation on it as well, which I can't complain about. And if I divide that over the amount of time that I've had the house, we arrive at like an average figure of, it's stupid to think about this monthly, but I've just broken it down for you, $381 per month. So it's funny to think that I'm also making my rent and the tenants are paying down the mortgage, but one thing I never think about is the price of the home going up. And what I've realized by doing the math is it actually goes up in value by $381 a month. So that's kind of cool, but one day, just as all of this stuff is, that's all taxable through capital gains if I do sell the property one day. But all that being said, about $4,500, $4,600 every single year in appreciation in the value of the home. Now, what's this last one? Well, return on home equity, what could that mean? Well, what you could do if you really wanted to, humor me for a second, is that you could take that home equity that you have in your house, and there's certain lending standards. For instance, if you want me to walk you through it, let's say that you have $200,000 home, it's worth $200,000. Now, what is 80% of that? Well, 80% of $200,000 is $160,000. And so what that means is you can get 80% of the value of your home, $160,000, minus the mortgage outstanding. Let's say you have $100,000 of mortgage outstanding. That means you have $60,000 that you can actually take out of your house and refinance. You can access that equity in your home and get a cash check for that from the mortgage broker. Now, all this, obviously you're gonna have to now pay your mortgage off longer. You're just taking that equity you have in the property out so that you can use it. And the crazy thing about that is you're effectively getting a $60,000 loan at an ultra low interest rate of, let's say, 1.9% or 2%. I don't actually leverage the home equity in my property just yet. It's not something I'm comfortable doing because for me, the home equity is a kind of my emergency fund for this house. If there's a roof that explodes or if the hot water tank goes, I'm essentially going to use the home equity in the house to cover those things so I don't have to withdraw from personal investments to cover those expenses, right? So for me, I'm okay not refinancing. I'm okay leaving that equity in there even though it's not earning a return that it could. That's probably something we'll look at in the future. But all that being said, on a cash basis, right? How much cash comes into my bank account every month from the rental property? Well, $1,800 because we get $1,800 from rent. But how much actually goes into my pocket overall? What is the total net inflows for me? Because that would include things like the principal payments. It would include things like the home appreciation, technically, if we want to think from an equity standpoint. Well, it's about $2,572 and $29,000 every single year. So that's kind of the inflows from the property. Next, let's look at the expenses, because we're going to have to deduct expenses from that. Unfortunately, we don't get to keep much of that money at all. We actually have a whole bunch of expenses that come up. And the first thing is not the entire mortgage, but I'm going to talk about the mortgage interest, right? Because the principal payment on the mortgage is kind of going back into my pocket, whereas the interest is not. That's an expense. So $310 a month in interest. Utilities, we're talking about electricity and heat and those sorts of things, $250 on average for that. Taxes, $200 every single month for the property taxes there. $100 to insure the place. Maintenance is next. Maintenance is essentially those things that come up from time to time. The toilet's leaky, the basement's flooding because someone stuffed diapers down the drain, I had handrails snapped off, someone busted their door, whatever it is. These small little things that add up over time. I've actually calculated that on average it comes out to about $2,400 a year in upkeep on the property, just making sure things are up to code and running on time. And the thing is, that doesn't actually come at $200 a month. That's usually like zero for like 6 months, then 1 month it's $1,000, and then 1 month it's $600, and then 1 month it's $100. It's very sporadic and very random, but on average I would account for about $200 a month in maintenance. And lastly, we have my favorite category, buffoonery. And to me, buffoonery is just money that goes towards tenants' stupid decisions where they decided to stuff diapers down the toilet and shove them to the point where your wastewater pipe explodes in your front yard and the construction company has to come out and dig out your whole front yard and the sidewalk, and then the city has to come and replace all of that. Yes, that actually happened to me. Or when someone paints demonic paintings all over the walls and leaves heroin needles everywhere. Those things happen as well, and I've had to deal with all of that. And on average, a lot of years there is no buffoonery, but sometimes there's like $3,000 worth of buffoonery. So on average of, about $100 a month, I could put that in maintenance, but I thought it was funny as another category because if you pick really good tenants, you probably won't have that level of buffoonery. But anyways, guys, all this being said, the total cash that comes out of my bank account every month is $1,452 on average, roughly, right? And the reason the net expense is lower is because I factored out the mortgage principal payment. The net expense, the net that's just leaving my wealth, that's leaving my balance sheet, is $1,060 a month, whereas the mortgage payment actually contributes to my balance sheet. It adds, or I should say it decreases the liability. So in that sense, the amount of cash that leaves is more than the amount of wealth that's actually extracted. It's more than the amount of wealth that leaves my balance sheet. So all of this being said, guys, the total cash expense, the amount of cash that outflows out of my bank account on this rental property every year is about $17,500, and the net expenses that I'll never see again, money that I will never again see or touch or feel, $12,720 just is gone forever. So now if we subtract all of these expenses from the income, well, what do we get? Well, that's what this page is for, our equity page. And here we're talking about, on average, what is the cash flow and what are the sorts of returns? And I'm kind of giving away the surprise here, but if we look at these line by line, after all is said and done, when I bought this property, I thought I was going to be cash flowing about $600 a month. And some months that does happen. But other months, it is completely wiped out by buffoonery or maintenance or a big utility bill, whatever it might be. So on average, it's about $350 a month net. And I think most real estate investors, if they looked over the past 5 or 10 years of the ownership of their property, they would tell people that they had a certain amount of cash flow from that property, but in reality, it's much lower when you factor in all the expenses. And this hit me hard because I thought, shoot, I thought this thing made me $600 a month, and I've been telling people that. In reality, if you factor in all those crazy expenses that happen that you can't predict, yeah, it actually comes out to about $350 or quite a bit less. Now, in total, every single year, that means about $4,200 that goes into my bank account net cash, right? That's just the cash that changes hands. Next, well, we can start looking at the different types of return, right? Like, what's the cash on cash return for this property? And for here, it's probably best to look at the annual numbers. Returns make more sense annually. Really, what I'm getting at here is, what is the cash on cash return? That means, how much am I getting out of this property every single year in cash, not necessarily in equity or in appreciation? How much am I getting out in cash flow divided by what I put into the property, which for me was about $33,000. So the cash on cash return, comparing it to another investment, is about 12.65%. And that's fantastic. And that's really good, but I have a caveat on that later. Now, the total equity return, when we talk about, well, if we think about the amount of money that we put into the property, we think about the appreciation on the property, we think about all of these different things, the equity that we build because tenants are paying the mortgage down, the total equity return is substantial. The total equity return is like almost 41%. That's crazy. And so effectively what that means is that every single year, I get what I put into the property. 41% of what I put into it in the first year, I get out every single year, which is that's a stellar investment. That's fantastic. Now, here's the thing. That doesn't compound, right? That's the tricky part about real estate investing. When you invest in stocks, they pay out dividends, or they grow, or they reinvest in the companies, and they compound if you reinvest those dividends, which you tend to do. In real estate, this return only compounds, it only grows on itself over and over and over again if you take all that money out and invest it in more real estate. And what that would essentially mean is always refinancing the max amount you can and buying another property, or always refinancing the max amount you can and putting in the stock market, whatever it might be, right? So that is really, real estate. You look at 41% return. Are you serious? Well, yes, but no, because it doesn't compound. And the real beauty of returns and high returns is compounding them. I would way rather have a 5% return for 40 years than a 100% return for 4 years, right? You need these to compound for a large amount of time, and that is kind of the downside of real estate, is you need to be the one who is compounding your own money instead of the investment compounding for you. But here was the kicker. Here's what I found fascinating, right? I never thought in my life that the return in real estate would come equally from appreciation, cash flow, and debt reduction. And what I found is that they're almost identical. The amount I made from appreciation over the course of holding this property, 34% of my total lifetime return on the property came from the appreciation. 31% came from the cash flow, and 35% came from reducing the debt. So it's crazy to think about this, right? It's kind of weird to think that in reality, we might think about real estate investing and the beauty of it just being the fact that we get this cash flow, a couple $100 every single month. But in reality, that's only like a third of the overall return. There is a ton of return that also comes from the property increasing in value and the tenants paying down the mortgage. Not to mention, you could make even more if you really leveraged yourself by refinancing the equity and investing that as well. But anyways, guys, this has been a lot of numbers. If you're the kind of person who's more quantitative, likes to see the experience of the numbers in real estate investing, this is what I got for you. This is what I can show you. But if you enjoyed this video whatsoever or got any value at all, make sure to hit that like button below, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.